And it gets punny now. Fireside chat with Stephen Richardson from Fireblocks and his fireside chat with Dickie from B2C2. Enjoy.
Thanks, everyone. Glad to be here again and appreciated the panel discussion prior to us. Really, at the end of the day, I think it's been an interesting basis to really think about custody as it relates to broader market infrastructure here in the digital asset space. I think one of the things we wanted to do in this session, and I'm joined by Dickie from B2C2, is to talk about all the different participants that exist and are really key factors in how the digital market is taking shape so far, and that their roles to play in terms of the widely adopted nature of digital asset by financial institutions. And so what would be great is to spend some time over the next 17 minutes really talking through what we're seeing in the space, what's Cameron seeing in the space, how we're supporting digital asset infrastructure as a whole, and where we see some of the key market issues and how firms like B2C2 are addressing those, as well as what we've seen the transformation in the space over the last year or two. So what I maybe will do really quickly is have an opportunity for Cameron to introduce himself to the broader group before we get towards the fireside chat.
Great. Thank you, Stephen. My name is Dickie. I'm head of EMEA sales at B2C2. We are the world's largest market maker and OTC liquidity provider globally in the crypto space. We're headquartered here in London. We have offices in Tokyo and the US as well. We market make on the top 25, 30 exchanges by volume, and also service the largest institutional crypto franchise globally. We were established back in 2015. We launched the first single dealer platform in 2016, and also the first fixed API connectivity for crypto.
Awesome. I think maybe one of the questions that we're seeing is, as a market maker, right, and someone that has been in the space for such a long time, where do you really sit in the ecosystem? And generally speaking, how's working with a market maker in the digital space? Obviously, we heard the banks previously, but how's working with a market maker in the digital space different from working with market makers in maybe other traditional markets such as FX and others?
Well, crypto looks and feels very much like the spot FX world. You have, from the spot FX perspective, very large, tier one banks that are providing 95, 98% of the liquidity. We very much play that wholesale liquidity provider role in crypto. There are numerous reasons why exchanges and institutional players trading at exchanges becomes very, very problematic. So we actually see the whole crypto ecosystem heavily resembling spot FX, not just from the liquidity standpoint that I mentioned, but the underlying plumbing, the way that you have bilateral relationships in terms of principal pricing and settlement directly to counterparties. Crypto had to learn very, very quickly to do a lot of that by itself. It didn't have access to traditional plumbing and market infrastructure that other parts of finance did. And so it essentially, there's a steady drain of talent from traditional finance and a lot of it from spot FX that really sort of set the scene for crypto to be built in a pretty self-sustaining manner.
Awesome. Yeah, I think one of the things we were seeing, more broadly as an infrastructure provider at Fireblocks is the idea that, as folks engage in the space, as we talk to banks, as they engage, there's some real questions as to the broader infrastructure that they're used to trading in other markets and what generally has been missing, as they engage today. And the real question is, how do they build that infrastructure? How do they collaborate with others in the space like yourselves to really drive that infrastructure forward and to build a ecosystem that makes a lot of sense? I guess, in that same vein, how has the market moved and changed? Obviously, B2C2 has been in the market since 2015, but, given kind of, the up and down of the crypto market, the crypto winter that happened in 2017, in essence, the, introduction or entrance of a lot of traditional financial players in the space, what are the changes that you are seeing, in terms of the digital asset market space, and how's B2C2 really handling that and engaging?
It's been very interesting. It's certainly been very challenging. From 2017, a lot of bigger players were gearing up to enter the space. The price action made it less conducive to do that, and you saw a lot of plans and interesting innovation shelved really through that winter period. We found it was a really great time to consolidate the business, to continue to gain market share. The key changes that we've seen over the past, say, 12 to 18 months are quite stark. Firstly, spread compression. Spreads have compressed by a factor of 90% and will probably continue to do so. That does lead you to conclude that it's becoming a more efficient market with ever increasing institutionalized participation. I will stress, though, crypto is still a cottage industry. It is still heavily retail flow driven. I think that is obviously starting to change. But with the new entrance to the market being of an increasingly higher level of sophistication with serious balance sheets, credit and counterparty risk, which was previously, the biggest blocker for these guys to enter crypto, we now tend to find that is becoming less of an issue. Settlement and parts of the credit and counterparty risk space. As an example, May 19th, we had a record day, not just from a volume perspective, but from settlements. We settled over $1 billion. Back to our clients, and that doesn't necessarily scream, that the whole ecosystem has real issues with credit and counterparty risk. It obviously helps that we're majority owned by SBI Group, who are a very, very large multi-billion-dollar banking corporation. But I think if you take that coupled with changes in regulatory framework since 2017, it's becoming harder and harder to ignore the asset class or find reasons why you wouldn't want to trade it. The opportunities for automated trading are evident. The returns that we're seeing from a lot of funds that have crypto exposure are very, very compelling. And I think if you take a number of regulatory frameworks that have been laid down in places like Switzerland, it's very easy to do crypto business now. You have directives that you can follow. You have overarching accountability that will make sure that you are, sticking to rules and regulations. And it really means that you are surrounded by counterparties that are all pulling in the same direction, and it removes a lot of the risk around trading and execution and settlement.
Right. And as you think about, counterparty risk, right? I mean, May 19th for Fireblocks and its customers, I think that day, through the system and through folks, moved north of $20 billion worth of settlement action, right? So, I mean, we're broadly familiar with the fact that folks are taking bilateral risk. I think, what are some of the key questions that, from banks that you're getting in terms of, how they engage with market makers and how they evaluate credit as a basis, with firms like yours? And maybe in some ways, what are like some of the infrastructural elements that, you see developing in the space now that are making it more comfortable for large financial institutions to choose to step into this market, given, its broad adoption we're seeing?
So, I mean, the rise of automated trading is the very, very obvious point. We're seeing, the interesting thing about banks is they basically have two decisions to make. Do we go for a custody play, or do we just offer underlying trading exposure? And each of those decisions will govern how quickly they can come to market, and arguably what their market share will look like for the next 3 to 5 years. We're seeing banks with higher risk appetite, really looking to make a execution play as quickly as possible, and we're seeing slightly more conservative tier one players looking to build out infrastructure, potentially using people like Fireblocks and others who are looking to build it themselves. And that is going to really set the scene for what the market looks like over the coming period. I think other interesting parts to remember is that leverage is absolutely something that needs to be addressed in crypto. It is. But at the same time, when you have banks who have underlying clients that want to take, sizable positions, it will still absolutely play a part in the volatility. Volumes will be on a steady trajectory upwards and will continue to grow. I have no doubt about that. But I do think it will be very, very interesting when you have the risk appetite potentially increasing from a large number of market participants with sizable balance sheets. That will be something that will really put a lot of demand from sophisticated clients on a lot of the underlying infrastructure. And as an example, we've been using Fireblocks for well over a year now, and it's certainly been something that we've been very, very happy with.
Awesome. Yeah, I mean, I think, I think one of the key questions that we're seeing as well, right, is right to that point of, do we build it ourselves or partner? Or do we, maybe, stream prices from, someone like a B2C2 or others that would give us an opportunity to get into the market quickly, right? And I think, there's some folks that I think are playing a very, interesting approach, right, of a hybrid basis where they start there, but they're concurrently in parallel building infrastructure to be able to rapidly deploy, right? And we think, that provides a very interesting and unique basis for them to be able to enter the market quickly and do so. I guess one real quick question before we kind of, I think, talk a little bit about what's missing is, from a geography perspective, where are you seeing maybe the most uptake, right? Obviously, we've talked about, regulation in Germany with BaFin, in terms of we're seeing a lot of firms really engage in the space here in Germany. Obviously, Switzerland, you mentioned, for regulatory clarity, is something that has been, pretty significant and made, entering the space easier. Are there other jurisdictions or other areas that you're seeing that, in essence, are banks are really pushing for engagement with firms like yours?
It is very global. I mean, I'll drill down, and absolutely the recent regulatory changes around special funds in Germany that allows them to now allocate to crypto as of July 1st. This is a really, really interesting and exciting development. I would love to speak to any funds if people are watching and do have any liquidity requirements when it comes to this part of the market. We think that Germany has been sort of a little bit of a sleeping giant in the crypto space. It has waited and watched for quite some time. Now that it is ready to address regulatory concerns for market participants, and it does have a fairly conservative traditional banking background, we think it's going to be a really, really exciting space. And you're right, FINMA over in Switzerland certainly caught the rest of the world a little bit off guard, and were very, very quick to lay down some regulatory framework. We've seen a consistent uptake in places like Japan. I mean, they have been regulating crypto liquidity providers for almost 3 years now, which is great to see, and certainly makes it far, far easier for the market participants to incorporate this alongside other asset classes. The FCA are, I would say, maybe dragging their feet a little bit in terms of putting anything meaningful down. It hasn't necessarily stopped us from being based in the UK, but they haven't exactly rushed regulation out the door, which is something that we're monitoring very, very closely. And then obviously over in the US as well, you have to almost tiptoe from state to state in terms of the underlying bit licenses that you can get. But we're seeing a lot of interesting jurisdictions like Luxembourg, Gibraltar, trying to make some plays as well. Malta for a while looked like it was going to be laying down some crypto regulation and was really making a quick grab for market participants, and then actually never followed through, which was something quite interesting to see. So one thing you learn about crypto and operating, you have to be nimble. The regulatory frameworks that vary from country to country mean that you need to try and be as regulated as possible, but you also don't want to commit too much to a jurisdiction where you're not definitely going to find a regulatory framework that that is easy to apply to and that becomes as all-encompassing as you would like it to. I do think it's interesting, though, that multilateralism seems to be a theme of the Biden administration, and if they coordinate regulators around crypto, which I think is probably more likely than not to happen. I think that some kind of overarching regulation, as long as it doesn't stifle innovation, because that's the great thing about crypto. You have so many market actors that are doing wonderful and interesting things. I don't know what a Basel III directive would look like for crypto, but I do worry that it would really pull the rug out from under a lot of these young and exciting firms that are doing lots of interesting things.
Yeah, no, I mean, I think, from our perspective as a technology provider, when we're engaging with the regulators, I think what we've seen, and we've talked with BaFin, we've talked with FCA, we've talked with MAS in Singapore. They have been open to understanding the challenges of innovation, or the ability to impact or provide regulation that does not hurt the retail consumer, but also still allows folks to be able to innovate, right? And the quick question that at least we're seeing here, I'm based out of Singapore, but even when we talk with folks in Germany is, how do we make sure we're protecting folks? How do we make sure that the technology infrastructure is, robust and is a strong one, right? And really secures the concept of the private key and other things. But at the same time, we allow people to innovate and we allow people to have market access in a real and meaningful way. So I think that's been something that we can all agree on. And I think it becomes really interesting. I think maybe, one piece is what's still missing, right? And as you think about folks wanting to engage in this space, what do you feel like as folks kind of step in there and they evaluate, really entering digital in a real way, they say to themselves is missing and needs to be addressed?
Well, for us, we're trying to address it, and that is having an all-encompassing prime brokerage type model. So, we from a spot and CFD liquidity perspective, we have the largest client franchise in crypto. We will now want to go after the Celsiuses and the Genesises out there and start taking market share on borrowing and lending, which is why we've launched a borrowing and lending product in the last couple of months. And we will also be principally pricing options in Q3 as well. That aspect of traditional finance, when you take that prime brokerage model and you offer your clients, multiple assets to trade on with all the cross-margin benefits that you would associate with that situation, it's extremely compelling, but it doesn't exist in crypto yet. So B2C2 prime brokerage is really something that we're excited about. We've seen a huge amount of demand from it for our clients. A lot of people try to offer a product without having the existing client franchise, and the fact that we can slot this in alongside to our existing clients is something that we're really excited by. And we think that it's really going to be something that is taken up because of those cross-margin benefits that you wouldn't necessarily get by connecting directly to, the derivatives of the world or right. The borrowing lending at Genesis or Celsius.
Yeah. I mean, what about banking, right? I mean, I think obviously we saw a panel with, folks like Commerce Bank and BNPP and others, but, how do you find, obviously I think you guys are matching and building mature infrastructure for the crypto part of the puzzle, right? But what do you see on the banking services side of things, and what are things that would be helpful as you think about that infrastructure?
Well, I mean, as a crypto native, we have never had our pick of the bunch when it comes to banking partners. Crypto has had to make do with certain banking providers, certain e-money license holders. I'm concerned that will be the last part of crypto to join the party. A lot of these bigger banks are happy to sit on the sidelines. They're not. They don't find it compelling enough. Certainly, if you're a big US bank and you face crypto, ultimately you have to answer for stuff on Capitol Hill, and you're finding that even though the infrastructure and market participants are absolutely the sort of quality that the big banks would want to face, there is still a lot of caution around it. And you don't get the added benefits of the underlying FX rates, because crypto is moving in and out of FX in big volumes on a daily basis. So that for me is the last part of the puzzle. But I think actually crypto has done a great job without the banks so far, and will probably continue to do so in spite of them.
Yeah. So I mean, I think we're wrapping up towards this session, and I think obviously. Cameron, much appreciated for spending the time with us. I think obviously the infrastructure that you're building behind B2C2 prime brokerage, obviously the broader settlement infrastructure becomes critical for banks and institutions to really engage in the space. And so again, appreciate your time today.
Thank you very much for having me.
And I thank you too as well. I'm really enjoying this upcoming dialogue format. I think it's great to have it this year a little bit more prevalent than recent years. Thanks again to Cameron Dickie from B2C2 and Stephen Richardson from Fireblocks.